Good morning, it's the 5th of May. We are Signal Centre Talking Ball. I am Joe, joined by Steve and Jamie this morning. Good morning, gentlemen. How are we doing?
Yeah, pretty good, mate.
Good.
Yeah, all good, thank you.
This is actually the 600th time we've done this, Steve. Can you believe it?
No, I think it's more than that. I
It
think I'm
could
going
be,
to have
actually. I
to
might have
count back
miscount.
and check.
Yeah,
Yeah,
600.
still
it's
pretty good.
yeah, not bad. Started
Yeah,
off like as a
impressive.
bit of fun.
Yeah, indeed.
Mm.
Right, so let's get stuck into the latest news because it's a fairly eventful close yesterday in many markets. Let's just bring up the latest headlines, and we're going to start off with the main news, which drove that big move in equities in particular last night, and that was that the Fed hiked interest rates by 50 basis points to 1%. There was a little bit of murmuring about a 75 basis point rate hike, but obviously that didn't occur. And generally, Jerome Powell said that that's unlikely to ever occur going forward. So the move was in line with the consensus forecast, and the vote on that was unanimous. According to the statement, household spending and investment remained strong despite a slight decline in economic activity for the first quarter, and of course touched upon the threat of inflation. Also added that rate increases are expected further down the line, but also noted the implications of the Ukraine war on the US economy are highly uncertain. The Fed will also start to shrink its balance sheet from the beginning of June with an initial cap of 47.5 billion for the first 3 months, which will then be increased to 95 billion. As a result of that, we saw Wall Street equities surge. The decline in yields also provided significant relief for Wall Street and the equities as they rallied significantly. The S&P 500 posting a gain of 3% on the day, and it looks as though pretty much everything participated as well. You know, the big tech names that we want to see involved in those rallies were on board as well. Maybe we'll have a look at that shortly when we come on to the stocks. In terms of the precious metal side of things, the lower US yields and the dollar retreat also provided important relief for precious metals, with gold posting a strong rebound on Powell's comments. Later today, we've got the Bank of England, and a dovish Bank of England rate hike is expected. There are strong expectations that the Bank of England will raise interest rates again at this month's policy meeting with a further 25 basis point increase, taking it to 1%. So pretty much in line, or in fact, definitely in line with what the US are at as well, in an attempt to curb inflation and keep inflation in check. Markets are expected to have priced this in already, so we're not expecting any surprises, and that comes at 12 o'clock today. So let's get stuck into some charts. Steve, would you like to kick us off this morning?
Yeah, sure. I'll start with Bitcoin as I normally do, and look at the daily charts really. And we've had a nice little bottoming
Can you share your
formation.
screen, Steve?
Yeah,
You think you know what you're doing now after 600 episodes?
I know exactly. I'm sure it's not 600. Um, nice little bottoming pattern in this corrective channel that we're in, and we can see that the 4-hour chart shows it better, but I still believe this could be the start of a bullish flag. Need a break on the downside to confirm that, but reaction yesterday pretty comprehensive. Bullish engulfing candle, broke above the resistance at 39,160 and continued higher. Yeah, but I know this is sort of like the rally has occurred, but I still believe that it's got to prove itself really over a sustained rally over a few days for me on the indices, and this is what's dragging cryptos up as well. On the gold side of things, yeah, we saw a nice little rally, and looking at the weekly chart, it also looks pretty positive. We're starting to engulf last week's bullish hammer as well. Although last week's candle was red, it still signifies that this big tail, or this wick that Jamie relates to a lot of the time, is pretty extensive. So that forms a really nice bullish hammer, which is positive. Price action has opened up lower this week than that, but has pushed higher and has potential to completely engulf that. So that will be a positive weekly candle on the gold side of things, and we can see that this support area has held with a nice little could call it a morning doji star formation, and prices are pushing higher. Really need to clear resistance around 1920 for me to sort of like look upon gold as another potential rally for the upside. So 1920 there, and it's got to maintain price action above 1850 without a doubt for this potential rally, correction to continue. On the oil side of things, oil has continued higher. A bullish engulfing candle from yesterday, quite clear here. We need to break 115.86 to confirm a double bottom formation. Although it's in the middle of a range, it still will have the same price effect. First resistance we've got to challenge is 109.06, and then 115, whatever it is, 150. Well, let's say 116. Round it up. Get a close above 116, and we're definitely off to the races looking for the all-time highs again. But I think that'll be pretty much based around the Ukraine-Russia situation, and as long as that's continuing, this has potential for the upside. That's about it on mine markets.
Lovely, thank you, Steve. Okay, let's take a quick look at FX before we then get involved in the US indices. So this is the dollar yesterday, and as we can see, there was a fairly hefty retreat in that, following the sort of mild consolidation that has taken place over the last few sessions. So a big drop down below support at 102.98, but we are trying to rally this morning up by 0.3% as things stand. So obviously the key thing that everybody will be watching is whether or not there's any follow through in the risk move, or whether or not what we saw from Jerome Powell has just provided a bit of relief to markets, and we're actually going to see a continuation of these trends. I wouldn't back against that. Clearly, this looks pretty strong overall, so I think I'd be looking for higher prices ultimately. But yes, there is room for a little bit more of a correction on that in the short term. If we look at Euro US dollar, we can see that rallied yesterday in response to Jerome Powell and the weakness in the US dollar, but pretty much only into a 38.2% fib level from this swing move here, from the highs on the 21st of April down to those lows on the 28th. So we've rallied into this resistance zone here, and we have seen sellers step in. So no reason, I think, at the moment to get too excited about any kind of reversal on that. If we take a look at cable, it's a similar situation. We posted a really strong candle yesterday, but already pretty much engulfed 3/4 of that ahead of the Bank of England rate decision later on today. So maybe, in fact, what we're seeing here is the early stages of a flag type pattern forming, which would have a tendency or a bias to break down in line with the dominant trend, which would be to the downside. So maybe just forming a little bit of a consolidation here, which will ultimately be a continuation pattern to the downside towards our next target, which is at 120.25. I'm going to leave it there for the currencies and move on to the indices now. And going to start with the German market that rallied yesterday in response to what we saw elsewhere in indices, but only into this downtrend resistance line. As we can see here, that has underpinned prices now for a number of months, going back to the start of January. So we need to see a pretty big effort, I think, from the bulls today if we're to overcome this downtrend line, and then even then upside is probably going to be limited to this kind of region here, which is at 14,813. So overall, yeah, a bit of relief, but probably only going to be in the short term, in my opinion, at the moment. S&P 500, big move to the upside yesterday, really coming off the back of this bullish hammer candle that formed earlier in the week, just there on the 2nd of May. Really nice turnaround. And yes, we have seen some decent follow through to the upside, but overall, it still looks like we've got some big rounding formations taking shape here, and I still think the bias is to the downside. So for me, it needs to do quite a bit more before we can get too excited about a turnaround on that market. And we are going to need to see some decent participation from some of these big tech names, I think, in order to attract some of the beaten up bulls back into the tech names. So let's take a look at NASDAQ. Again, similar sort of situation. We've seen a decent rally following the reversal that posted on the 2nd of May. But again, for me, lots to do here. Big rounding formations, still a big dark cloud really over the market for me at the moment. So any rallies to the upside, I think, are likely to be short-lived and will present opportunities to sell into. Happy to be proven wrong, of course, but I just think we need to see it fairly substantially higher than it is at the moment to get excited about the markets moving up over the more medium term. Okay, that's it from me. Jamie, what are you seeing on stocks? Can you confirm any of what I've just said? Is there any sort of stocks taking part in this rally that we should be interested in?
I feel same as you. I'm yet to be convinced, and I'm kind of waiting for those more sustained moves before I kind of get back on the bull side with a lot of these stocks. But we'll start off with our biggest gainer and loser today. Our biggest gainer is this. This is Transmedics Group, up 40% on earnings success. Doesn't like they beat on earnings per share, but it seems like it must have been a good earnings. I haven't really dived into it, but up 40%, so quite happy there. Less happy is this. This is Kaiser Life Sciences, and this is actually just before earnings, so that's not the kind of price that you want to see going into an earnings report. We had this big gap up on earnings, and now had a gap down. So, I mean, it's kind of be careful, I guess. I don't know. We'll dive into some of the more mainstream stocks. So, and first I want to look at AMD. Now, AMD was really struggling the last since it posted its high back in November. But yesterday we had its earnings come out, and I think it seems to have beat. You can kind of see in this bottom right corner, it's beaten earnings estimates. But maybe we'll have a look at our corporate calendar, and we can go into that a bit more. But we've got this bullish hand. We're going straight into this resistance here, which is a level I kind of thought we'd eventually gravitate towards. So it'll be interesting to see how price interacts with this level. I think a significant close above it would be very good for the stock. So the next few days are pretty crucial on AMD. I think if we kind of start stuttering here and start heading back down, it looks like it could just be another rally that's been sold into, and there could be potential for lower levels to come. What else do you want to have a look at? I had Apple. Have a look at Apple here. Apple came right back into this support level we've had drawn on previous resistance support. We had this bullish hammer type candle, and this had some really nice follow through on Apple. So actually, this is one of the stocks where, excuse me, where we've got a slightly more convincing picture for the bull side. We haven't had this lower high yet, and this candle here is certainly very positive. It's engulfed all of this wick here, which is it's good to see from the bull perspective. So we'll kind of see how that develops over the next few days as well. And what else we got? We looked at Apple yesterday. I was going to take a quick look at Lyft. This is an earnings that didn't go so well. It seemed to beat estimates for earnings per share, but I guess there's something a bit sicker the deeper you go into it. But we gapped down, I think almost 30% on the day, and we gapped right down. I'll bring out to a weekly into this previous support level from back in October of 2020 and March of 2020 as well. Huge volume already. I mean, we've still got a couple of days left this week, but things not looking so good for Lyft. There's probably some kind of Lyft fell. I don't know. Lyft got dropped. There's something there. We'll work it out. We'll jump into the NVIDIA quickly. Yeah, again, similar kind of story to what we're looking at the start, AMD. So we had this breakthrough, quite a key support level. It looks like we're going to be retesting it sometime soon. At least that's what I'm looking for. But again, like we've been saying, I'm still yet to be convinced. I'd like to see the kind of this level here, this 225 level, to be taken out, because we're still having these lower highs and lower lows. And until that picture changes, I'm not convinced of any real oomph behind the rally. We'll have to see. A lot of it remains to be seen. We've looked at Lyft. Let's look at a couple more. We've got here Palantir. I know a lot of people like this. I don't. We're again key support level. We've got earnings coming up. TradingView has it on the 9th of May. So that's very soon. We're at this very key level already, this 10 psychological level. What I wouldn't be surprised to see here, considering we've had this downtrend, is a continuation head and shoulders. I know that's not the traditional way it's used, but from a psychological level, it just shows if we were to get a bit of a rally, let's see if I can draw it on, that would be good. So if we get kind of a move up here and then it gets sold into a bit and we break through, I know it's not traditional type head and shoulders because that signifies a reversal in the trend. But this for me shows the bulls tried to get back hold of it and then they failed. If that were to play out, obviously we're preempting it a bit, but we're in this downtrend, so my bias is still bearish for now. We'll look at, I've got so many we can look at. We'll jump into a couple quickly. Tilray, a very key support level. We've had earnings for Tilray. Things not looking good. I mean, it's been in this long-term downtrend. Again, this similar kind of thing. We could be having a slight head and shoulders forming here. We'll see how this plays out over the next couple of weeks, and we'll probably circle back to it. BNP Paribas, I had drawn out this resistance level, but it seemed the open has gapped through it, although it has sold off on the open. So we'll see how this develops. We're at this kind of short-term trend resistance line as well. We're at the short-term resistance, but it seems to be selling off already. So an interesting level there for that. And Boohoo, finally, we'll call it a day here. Bad earnings at this previous swing low here, in this long-term downtrend. Again, this to me looks like a kind of a consolidation pattern for a further move lower. And let's see if we've got any reasonable targets. We've kind of got this 55 level of this previous support and resistance. Have we got any nice Fibonacci's? I don't think so. I think they've all been taken out. Yeah. So, there's a lot of room for this to move lower. I think at least this kind of 55 level. So one to keep an eye on, especially if we do get this close through this green support level I've got marked here at 66. This isn't pounds, is it? Pence. There you go. I'm getting it. Cool. Yeah, we'll call it there on the stocks today.
Thanks, Jamie. Nice work.
Actually, it's BNP Paribas. Jamie,
Paribas?
just Paribas, yeah, not Paribas. We had their CEO contact me yesterday to say, could you make sure your analyst pronounces it properly?
That's a bad job from me.
Well, it's a French word, isn't it? They're quite difficult to say sometimes.
Yeah, I'll brush up. I'll brush up on it.
Nice one. Okay, so the Guns to the Head challenge. Every day, each of us picks a live idea on the video. Each of the ideas must have a stop and a target. All the ideas are placed at market and published directly to our TradingView profile. The trade ideas will expire at 9 p.m. or when the stop or the target is hit, and we monitor the performance of those ideas. So this is, as we said, the 600th episode of Talking Bull. And this really just started out as a bit of a joke, really. We thought, right, let's just pick a trade idea live on the show and see how we get on and see if we can test our skills as analysts, but also, making it pretty clear this was made up on the spot. And overall, the results have been pretty satisfactory, really, considering I think we've done nearly 1,400 trades between the three of us, and include Ian on that as well. So between the four of us, some pretty decent return overall, over 100% up had you had risked 1% on each of the trade ideas that we published. And the average win rate, is around about 40%. So it's been a bit of fun, hasn't it?
Yeah. Quite surprising that it is positive, to be honest, because it, making a trade up on the spur of the moment, it shouldn't really sort of result in such a positive turnaround. But yeah, happy with that. Not happy with yesterday.
No. So yesterday, sadly, Steve and I were both stopped out. I went long of Sterling Oz. Steve went short of the Hang Seng. Jamie managed to hold on to some profit, although he was looking pretty rosy on that at one point throughout the session. But the turnaround off the back of the Federal Reserve interest rate decision and commentary yesterday meant that he gave some of that back to close half an hour offside. But today's a new day, and there is more risks present in the market as a result of economic data, particularly the Bank of England policy decision, which is around midday, and then following that, the US jobless claims number for the week. So how are we going to try and navigate this today, guys? Anybody got an idea ready?
I've got one, and it's the only one I can come up with, and it is with the indices. I'm not convinced by the rally, but I still think it could have some legs in it today. So I'd be looking at maybe trying to fade that move tomorrow if I can, if it does continue. The only one that really caught my eye was the sterling dollar. Obviously, this has got the Bank of England at 12 o'clock, expecting 0.25% at least. There is potential for 0.5%, but very unlikely because obviously Bank of England are very concerned about inflation as well, and obviously the effects that this interest rate will have on it, and or concerned that it'll have a bigger effect on growth maybe. But if we look at the popular pairs in here, the Acuity New Sentiment 2 days ago posted 80% chance of the price falling within the next 10 days. Within 8 days, 80% on the last 10 occurrences, prices falling within 8 days. And you can see that sort of like this blue line here, New Sentiment is moving lower. Over the last 24 hours, it's picked up a little bit more positively. We've got the fear index escalated because Bank of England coming out, but it is seen as a bit of a dovish hike. So I'm sort of price action after the Fed cut yesterday rallied up into this resistance level 61.8. I don't know where that's drawn from. Let me just get rid of these. So yeah, nice decent rally on decent volume, but has rejected. So I'm thinking that's a little bit a bit of a failure. And we obviously know that we're expecting 0.25%. So if 0.25% happens, it's not going to be any surprise. So the markets, I believe, will read it negatively. But it is forming for me a bit of a bearish flag. So that's what I'm thinking. You can see that really positive candle yesterday. We've given up most of the games already. So I'm going to look at that bearish flag and take it as a potential for further downside. I'm going to sell sterling dollar, or cable as it's also known, and I'm going to target. I moved down to around about there. So selling it at 125.28. Targeting I'll have a 50 tick stop. Might not be enough to stave off the volatility we get over the actual hike itself, but I'll go for a 2.5 to 1 risk reward. So overall, selling cable at 125.28, targeting a move to 124.03, and the stop is at 125.78. That's my trade idea for today.
Okay, best of luck.
Nice.
Jamie, you got one ready?
I've just found something I can do.
I can go if you want me to.
Oh no, you go after you.
Okay. As Steve mentioned, I think we were all a bit skeptical really of the rally in indices today. So I've highlighted NASDAQ actually as the market that I wanted to sell. It's trading in a bit of a range here in the very short term. This is the hourly chart, and we can see it's failed into this resistance level here at 13,541, and it's reversing lower today, down by 0.5% already. So I'm going to sell it at the current level of 13,426. I'm going to target a move down to these swing lows here that we posted on the 2nd of May. So I'm targeting 12,715. My stop loss is going to be above the highs that were posted here on the 26th of April, and also these highs that have been posted over the last few days as well, and that's going to go at 13,597. So that's going to give me 4.12R risk reward ratio today. So quite happy with that. Obviously potential for it to continue rallying higher following the reversal that we saw yesterday, but for me, I think it's another opportunity to fade it, and we're going to see lower prices. So that's my trade idea today. Over to you, Jamie.
Sure. That was actually one of the ones I was looking at. I'm glad I didn't go with it. But something a little bit different, and this is highly speculative, is the dollar index. We've been kind of ranging in this channel here. We've got a bit of a double top formation being posted on the hourly charts. We've retested this previous support level, and I'm going to have a go at selling this actually in anticipation of a move lower. With this double top, we're only looking for And this is the kind of expected measured move from the resistance to the support. Extrapolate that out. So we're kind of aiming for this level. I don't know if we'll get it down there, but I'm gonna, I'll take a punt. Why not? So we're gonna try to sell the dollar index at, what are we at now? 102.90. We're gonna have our take profit at 101.95, and we're gonna have our stop loss at 103.17. Expecting move down to this level here. Our risk reward is 3.52R. So looking for a move lower on the dollar index today.
Lovely. That's good. Okay, so in terms of data-wise today, let's just wrap this up. We have Norges bank rate decision, which is due out in 32 minutes. So another central bank coming to the wires. I'm not sure what's expected. I haven't seen anything on my notes on that, but obviously be aware if you're trading any Norwegian currencies into that at 9 o'clock. At 12 o'clock, it's the big one today, which is the Bank of England policy decision. As Steve mentioned a moment ago, we're expecting a 25 basis point rate hike, although potential for something a little bit more aggressive. But pretty much priced in at around about 25 basis points. And then at 1:30, we've got the US initial jobless claims number for the week, which may give us a little bit of an indication on what to expect tomorrow on the big one from the US, which is the non-farm payroll number. So that is that for today, unless either of you have anything else to add.
No, all good, thanks.
No, happy here.
Perfect. Okay, well, let's wrap it up now then, and hope everybody has a lovely day.
Cheers.
Goodbye, everyone.